If you've been paying attention to the market lately, you know it's been a bit of a roller coaster. Ups, downs, and everything in between. It's enough to make any investor anxious. But here's the thing, in times like these, finding the right investments can make all the difference. And that's why today I'm going to talk about dividend growth stocks. I'm going to cover 4 cheap dividend growth stocks that are prime buys for September 2024. These stocks are flying under the radar right now, but they offer steady income through dividends and the potential for significant growth. It's the perfect strategy for beating those market blues. Invest in something reliable and watch it pay off over time. In the end, I will show you a prime fund manager's favorite stock that has the potential to turn a $10,000 investment into a $2 million portfolio valuation and pay a monthly dividend income of around $20,000. Stick with me as I break down each of these stocks, explaining why they're undervalued and how they can help you navigate this tricky market. Before I dive into the stocks themselves, let's talk about how I selected these 4 picks. When it comes to dividend growth investing, not all stocks are created equal. To find the best opportunities, especially in a volatile market like this one, we need to focus on specific criteria that indicate both current value and future growth potential. First, I look at dividend yield. This is the income you'll receive just for holding the stock. But a high yield alone isn't enough. I also want to see a strong dividend growth history. This means the company has a track record of consistently increasing its dividend payments, which is a great indicator of financial health and commitment to returning value to shareholders. But you can let this one slide if you're looking for an up-and-coming stock with stellar financial statements. Next, I consider the price to earnings or P/E ratio. This tells us whether a stock is undervalued relative to its earnings. A lower P/E ratio often means the stock is a bargain, especially if the company has solid growth prospects. Speaking of growth, I also assess the company's earnings growth, both past performance and future projections. This helps us gauge whether the company can sustain its dividend payments and continue to grow them. Finally, I look at financial stability. These includes factors like debt levels, cash flow, and overall market position. I want companies that can weather economic storms and still come out on top. By focusing on these criteria, I've identified 4 stocks that not only offer attractive dividends, but also have the potential to grow significantly in value. Coming up next are stocks stacked in order of their potential to add value to your portfolio, starting from strong and building up to the most impactful. Starting at number 4 is the Fifth Third Bank Corp., ticker FITB, one of the largest and most established regional banks in the United States, with a market cap of approximately $26.85 billion. Operating in the diversified banking sector, Fifth Third is known for its strong financial position and solid dividend track record, making it a noteworthy option for dividend growth investors. What sets Fifth Third Bank Corp apart is its attractive dividend yield, currently at 3.44%. While slightly lower than some of its peers, the bank has demonstrated a consistent dividend growth rate of 11.07% over the past 10 years. In terms of valuation, Fifth Third's P/E ratio stands at 12.05, which suggests the stock is fairly valued relative to its earnings. Despite the challenges faced by the banking sector in recent years, FITB has managed to maintain a stable financial footing, supported by a strong balance sheet and consistent earnings growth. When we look at performance, Fifth Third Bank Corp has shown resilience. Over the past year, the stock has returned 17.95%, and its 10-year return is an impressive 106.18%. This stability, combined with its reliable dividend payments, makes Fifth Third a solid choice for those seeking a blend of income and growth. Looking forward, the future projections for Fifth Third Bank Corp remain positive. If you were to invest $10,000 in Fifth Third today, the potential growth over the next few decades is substantial. After just 1 year, your investment could grow to $11,056. Taking a longer view, after 10 years, your investment would be worth $29,013. After 20 years, this amount could grow to $100,139, and by the 30-year mark, the investment could reach an impressive $443,968. This long-term growth is driven not only by the stock's capital appreciation but also by the reinvestment of dividends, which further compounds the value of your investment. With dividend payouts projected to reach $39,907 over 30 years, this stock offers a solid monthly income of approximately $3,326. Next at number 3 on my list is the KB Financial Corp. Inc., ticker KB. This is a prominent player in the financial sector, specifically within the diversified banks category. With a market cap of approximately $23.58 billion, KB Financial is a dominant force in the banking industry, particularly in South Korea. What makes KB Financial a compelling choice for September 2024? For starters, the stock is currently undervalued with a P/E ratio of 6.65, which is significantly lower than many of its peers in the same industry. This low valuation provides an attractive entry point for investors seeking both growth and income. KB's forward dividend yield stands at a healthy 4.25%, which is above the industry average. And its dividend growth rate over the past 10 years has been an impressive 18.62%. For our calculation, I will use a conservative dividend growth of 10%. In terms of performance, KB has shown resilience and growth even in challenging market conditions. The stock has delivered a year-to-date return of 51.66%, and over the past 5 years, it has provided a total return of 95.88%. This consistent performance, coupled with its strong dividend, makes it a reliable choice for dividend growth investors. Looking ahead, KB Financial Group's future projections are quite promising. If you were to invest $10,000 in KB Financial today, conservative estimates suggest that this investment could grow to $10,909 in 1 year. Over a longer time horizon, the potential becomes even more significant. After 10 years, your investment could be worth $26,456, and after 20 years, it could grow to $95,666. By the 30-year mark, you could be looking at a total value of $567,814, paying $83,945 in annual dividends, or a monthly income of $6,995. $500,000 sounds good, right? In the end, I will show you a prime fund manager's favorite stock that has the potential to turn a $10,000 investment into a $2 million portfolio valuation and pay a monthly dividend income of around $20,000. At number 2, I have the Regions Financial Corporation, ticker RF. RF is a standout in the regional banking sector. Unlike many of its peers, Regions Financial has carved out a strong position in the southeastern United States, providing essential banking services with a focus on community engagement and customer loyalty. With a market cap of approximately $19.12 billion, Regions has managed to balance traditional banking with a strategic focus on growth and innovation. One of the defining features of Regions Financial is its exceptional dividend yield of 4.65%, which is significantly higher than the average yield in this sector. What sets RF apart, however, is not its yield, but its remarkable dividend growth rate. Over the past 10 years, it has averaged a dividend growth rate of 21.23%. For future projections, I will be using a conservative dividend growth of 11.96%, which it achieved last year. When assessing value, Regions Financial presents an intriguing opportunity. The stock's current P/E ratio of 10.43 suggests it's undervalued relative to its earning potential. This valuation, combined with a solid balance sheet and prudent risk management, positions RF as a strong candidate for investors looking for both income and long-term appreciation. Performance-wise, RF has shown resilience in a challenging market. Over the past decade, the stock has provided a total return of 119.84%, significantly outpacing many of its regional banking peers. This impressive track record underscores the bank's ability to generate consistent returns even in volatile market conditions. Looking to the future, Regions Financial Corporation offers compelling potential for long-term investors. A $10,000 investment in RF today could grow significantly, with projections estimating a valuation of $11,240 after 1 year. Over the next 10 years, this investment could grow to $35,122, and over 20 years, it could reach $158,454. By the 30-year mark, the total value could soar to an impressive $1,121,462, driven largely by the power of dividend reinvestment. But what really makes Regions Financial stand out is its potential income it could generate, with dividend payouts projected to total $128,797 after 30 years, meaning this stock could provide a monthly income of approximately $10,733. And now, finally, at the top of my list, the one that has also been on the buying frenzy side of many fund managers is the CubeSmart, ticker Cube, or CUBE, a major player in the self-storage REIT, real estate investment trust sector. Unlike traditional financial institutions, CubeSmart offers a unique way to invest in real estate through self-storage facilities, a sector that has shown remarkable resilience and growth, especially in times of economic uncertainty. With a market cap of approximately $11.08 billion, CubeSmart is one of the largest and most well-established REITs in this niche market. From a valuation perspective, CubeSmart trades at a P/E ratio of 28, which may seem high compared to traditional stocks, but it's important to remember that REITs often trade at higher multiples due to the nature of their business and the tax advantages they offer. CubeSmart's focus on operational efficiency and strategic acquisitions has allowed it to maintain strong profitability, with a B+ rating in growth and profitability metrics. When it comes to performance, CubeSmart has been a stellar performer over the long term. The stock has delivered a 10-year return of 157.38%, outperforming many other real estate investments. This impressive performance highlights CubeSmart's ability to capitalize on the growing demand for self-storage solutions, making it a compelling choice for investors seeking both stability and growth. What makes CubeSmart particularly appealing is its combination of growth and income potential. The company offers a solid dividend yield of 4.20%, which is very attractive in the context of real estate investments. Moreover, CubeSmart has demonstrated a strong commitment to growing its dividend, with an average growth rate of 14.98% over the past 10 years. Looking ahead, CubeSmart's future growth prospects are as solid as its past performance. If you were to invest $10,000 in CubeSmart today, the potential returns over the long run are substantial. After 1 year, the investment could grow to $11,403, driven by a combination of capital appreciation and dividend income. After 10 years, that initial investment could be worth $40,977. Extending this to 20 years, the investment could grow to $225,877, and by the 30-year mark, it could reach an astounding $1,994,600, paying an annual dividend of $281,112, equating to a monthly income of $23,426. This makes CubeSmart not only a strong growth play, but also an excellent source of passive income for those looking to build a substantial and growing income stream. Want to know how to turn a $25 per week investment into a portfolio that pays over $5,000 a month? Click the video on the screen to find out.